Welcome back. Aveng has revealed plans to divide its two core operations, one in Australia and the other in South Africa. This announcement comes alongside its annual numbers, where it returned to the black, posting headline earnings of 38 million Australian dollars, which translates to 466 million rand. And joining me now is the company CEO, Scott Cummins. Thank you so much for your time, Scott. Of course, the big news of the day is the swing from a loss to a profit. Would you say that this is a turn in a sustainably positive direction and the bottom has been reached?
I would certainly say that, Zenati, and thank you for having me on your program today. Yes, look, we're very pleased with the turnaround, and we think that that's the beginning of some consistent earnings projections for the future. We'd be expecting that, or certainly from my position, that to improve in the coming periods of time as well. You would have noted that you said in our results presentation today that the embedded margin in our work in hand is actually increasing, which is a precursor and a sign as to what we can potentially expect going forward.
All right. Scott, one thing that jumped out at me was that you said you're still feeling the effects of a project hyper-escalation before COVID. What exactly does that mean and how are you handling that?
Yeah, so what that actually means is projects that were awarded to us prior to COVID didn't really take into account the potential impacts of a hyper-escalation period post-COVID because we didn't think about it at the time. So we still have a number of projects in our portfolio that we're currently executing. Although the execution of those jobs is going very well from a construction standpoint, the cost of executing those due to the hyperinflation period that immediately hit post-COVID is having an impact on those projects. So they were hit twice. They were hit during the COVID period and the disruption that caused, and then they were then hit with the hyper-escalation that immediately followed. So they're having a negative impact on the overall margin we can produce as a group. And they will remain having an impact until such time as they're fully complete. And the good news is that the projects awarded to us post-COVID are all performing very well.
All right. Well, I mean, just talking about those margins, because you do say that the embedded margin in the work in hand has increased, and then also you talk about the margin impact of the cost of execution for these projects from before COVID. What are you working on there to get to a pathway where the runway for margin expansion is growing and widening and elongating?
Yeah, well, it's probably two parts to answer that question. The first part is it just needs to be a passage of time now for those pre-COVID projects to be completed. And over the next 12-month period, the majority of those will be behind us to the point where their impact becomes minimal or negligible. The second part of it is measures that we've put in across our organisation to ensure that we have a more robust process associated with our tendering activities and a more robust process associated with our project reviews to ensure that each and every tender we put in, we have confidence it's going to deliver its margin. And then in execution, if problems arise, and in our business, there are always going to be problems arise, but we're quick to identify them and quick to put in any remedial actions that are required to return the project on course to delivering the margin expectation for that particular project. So our risk mitigation processes in combination with working the backlog off of those pre-COVID projects is going to put us in a good stead to improve margins in the future.
All right. Well, Scott, let's go into the splitting of McConnell, Dowell and Moolmans. Would McConnell, Dowell, because I do understand that you are exploring a listing, a dual listing, would that be replacing the current Aveng listing?
Yes, so I think the best way to get into this conversation is to think about Aveng as it stands today. It has three operating segments: McConnell, Dowell in infrastructure, Built Environs in building, and Moolmans in mining. And then from what we did is we did a comprehensive review and looked where operational and strategic synergies existed and where they didn't exist. And we saw synergies between McConnell, Dowell and Built Environs. But Moolmans, because its business, the nature of its business model, its capital needs is so very distinctively different to McConnell, Dowell and built environs, it made getting or attaining operational or strategic synergies very difficult. Both parts of the organisation are looking for capital to be able to grow, to support their future strategic plans. So then it became a question, are we better off looking for investment in the organisation as the two combined, or was we going to have a better appetite for investments to come in if they look at a pure play of construction and building in the Australian, New Zealand, Southeast Asia geographies, and then a pure play in contract mining over here in South Africa. So what we've done now is, by virtue of our expressed intent to create independent and separate strategies for those groups where they can independently and separately seek capital, we haven't thought through the exact mechanics of how that separate strategy will play out. But now that we've made our intention very clear, we will have all of the conversations necessary with potential parties that will affect that strategy going forward. One of which, as you've correctly stated, is a potential listing of the McConnell Dowell organisation on the Australian Stock Exchange, with a secondary listing on the Johannesburg Stock Exchange. That's one possible mechanism of many, and we will review all of them, evaluate them, and in time I'll be able to report back to the market exactly which mechanisms we'll put in place to affect the intent of the strategy.
I do understand, just lastly, as we wrap up the conversation, Scott, that of course the goal of the split is for the two different businesses to attract and to access more capital. But I do understand currently that your balance sheet has gone through a makeover. Is the current balance sheet where it's sitting, will that be accommodative for the execution of the split?
Yes, we believe so. That's not to say that going forward the Moolmans organisation won't need an injection of capital to be able to make their strategic plans a reality. But as you may be aware, we've appointed Macquarie Capital as our investment advisors, who are doing an excellent job with us, working through the strategic approach and providing us with the necessary advice. And on the back of that advice, we believe the strategy that we've announced as our intent is very workable and very realistic.
All right. Well, thank you so much for your time and just giving us more detail on the numbers that came out and the strategic pathway that you are on. Much appreciated. That was the CEO of Aveng, Scott Cummins.